Everybody wants monthly cash flow. So if I'm an investor, I want to see monthly checks coming in. This guy, 100,000, he has to wait for a year for his money to come in. Whereas if I'm $100,000, I'm getting $1,000 a month in my checking account.
I got you. So you're dividing it up into an A and a B category. One category A, class A,
Correct.
whatever this investors.
Two different share classes.
Yep.
Two different share classes.
And so
class A gets the 1.5 equity multiple, and class B gets 12%, or sell this easy at 15%, right? If you go 15%, then you're paying them. Everybody wants that. The mindset of, I want cash flow. Cash flow is king. You're selling the idea that cash flow is king, and you're keeping the majority of the profits. They only care about, they put in 100 grand, they get 1250 every month. That's all they care about. Most people, Alex would be a good example of that. Most people want that instant gratification, wants to understand it's pretty straightforward. I put in 100 grand, I get 1250 back every month. If I put in
that's 15%.
25 grand, I get $300 a month, right?
Yep.
So that's how we make substantially more money. Notice how less equity we get if we sell it at 350 versus 400, right? It's a big deal, but it's still probably less than 5 hours a week of work per year. And basically you got to deal with the transition between renting and going through the conversion. But the lawyers do most of it, right? Condoization.
You're just pushing paper and signing papers.
Yeah, the lawyers do all of it. This is lawyers, right? So you're hiring lawyers here, you're hiring a survey here, you're hiring a bookkeeper here, and God, I hate insurance, but and that's a big question. I don't know. I know you guys' insurances are crazy expensive. I don't know. I'm going to redline this one. I don't know about your tail insurance in Florida, but it could be expensive.
That was the one you wanted me to look up, right?
Yep.
Okay. I couldn't remember the name for it, and it was like I was looking up the acronym OCIA insurances, and I couldn't figure out anything.
OCIA. Because there's no reno, this should be stupidly low. We usually put in a 5% across the board. Like we put in 5% every time we buy a building. It's just going to be 50 grand. But we're doing a lot of renovation, which means that the liability goes higher and higher. You're doing no renovation. You're only liable for the things you touch. So because there's no reno, there shouldn't be that much tail insurance.
Right. That makes total sense.
And then this is we get to walk out of escrow with money, which is always good.
Yeah. Okay. So my pitch to people are, I'm going to dumb it down really dumb for them and say, we have two options. Number one is you can invest over $100,000 and get a 15%, and we could lower that down if we need to, percent after year 3 in monthly income. Or you can be a class B, which is 13% monthly. I think we were promising quarterly returns, but quarterly returns. Am I repeating that back effectively?
Yes, but I'm going to change a little bit. Monthly returns get more interest, right? It's a little bit more, it's literally minutes more in accounting, but you're going to get so much more investor interest if you're paying a monthly dividend instead of a quarterly dividend.
Okay.
And again, your bookkeeper is doing the work, not you. Are you the bookkeeper?
Right now I am, but I'm not going to be. And this one, I'd rather hire someone. These are just areas I don't know how to do. So yes, I would love to hire a bookkeeper.
I've got $500 or $1,000 a month set aside for bookkeeping.
Perfect.
Yeah, because I don't do any of that crap. I don't enjoy it. I don't want to do it. I don't really want to learn. We can beef up the bookkeeping. We can change it to $1,000 a month, but it's a negligible cost.
Okay, that's perfect. So monthly returns, class A.
Class A would be there's only going to be one. You got to be a big ticket investor. You got to write $100,000 check, and there's only one. So there's a scarcity mindset. You are the first in, or you're going to get stuck with the interest, and nobody's going to want that comparatively. So this is, you tell your one good friend that this is set, and they'll get 1.25 equity multiple.
Yes, 1.25 equity. multiple. Okay.
And that is essentially you're putting 100,000 in, you get 125 back. So yeah, class A, that you tell your one best investor, this is the deal for you. This is what you get. You don't ever, after you got that one investor, you never mention it again, the other option, right? They're going to see it in the PPM because that's what PPMs are for. But like, sorry, you missed out. We're oversubscribed. This is the one and only choice, which will make them hungry for the next deal.
Yeah. So, and essentially it's a 15% return.
Yeah.
Okay. So they're getting a 15% return. Our 1.25 equity multiplier in your experience sells better.
Yeah.
And so that means that over how long? Over 3 years is our term to do the 1.25?
This is a 12-month deal, in and out. Are you grimacing about the short term of this?
No. I'm trying to wrap my brain about it. I love that idea. I love the fact that it's short term. I love that because it gives us a return on time, right? It gives us our money quicker returns on deals.